morning everyone, this is Iosif, analyst at IronFX, bringing you the morning comment for the 6th of February. Early in today's Asian morning, RBA's interest rate decision was announced. RBA decided to remain on hold, as it was widely expected by the market, and kept its interest rate at plus 1.5%. The accompanying statement had an upbeat tone, with comments for inflation being likely to remain low for some time. A gradual pickup of inflation is expected, and it should reach a bit above plus 2% in 2018. The statement also spotted as a continuing source of uncertainty the outlook for household consumption. Specifically, it mentioned that household incomes are growing slowly and debt levels are high. AUD-USD was practically not influenced by the RBA decision, indicative of the neutral effect as the market was expecting the outcome. AUD-USD began to trade yesterday in a sideways manner with a bullish tone, however dropped heavily later on during the US session, breaking the 0.79 support level, now turned to resistance. The pair could continue to trade with some bearish tone, however we see the case for the pair to stabilize somewhat later on, as the relative strength index is already below 30, possibly signaling an overcrowded short position. Should the bears continue to have the upper hand, we could see it breaking the 0.7782 support level and aim for the 0.7683 support barrier. On the other hand, should the bulls take the driver's seat, we could see them drive the pair beyond the 0.79 resistance level, aiming for the 0.80 resistance hurdle. On other news, US dollar strengthened as US stock market plunged yesterday. Dow Jones erased all of its 2018 gains in one day, as the US stock market plunged in a volatile trading on Monday. The reasons behind the sell-off could be spotted amid concerns for rising bond yields and higher inflation, which could have prompted worse of a faster rate hike pace. Friday's strong US employment report strengthened the argument for such a case. The US dollar gained on buying interest as investors sought its relative safety, according to various media reports. It would be indicative that the US dollar outperformed most of its rival, but the JPY. Overall, we expect the US dollar to continue to strengthen, however the gains could be somewhat limited. US dollar Japanese yen dropped yesterday, breaking the 109.20 support level, now turned to resistance. The drop could be interpreted as JPY outperforming the USD as a safe haven. However, we would not hurry to call for a further sell-off, as the relative strength index has approached 30 and in the hourly chart volatility is decreasing. We could see the pair stabilizing during the day and even experience some bullish pressures in a possible correction phase. Should the pair find new selling orders, we could see it breaking the 108.30 support level and aiming for the 106.95 support area. On the other hand, should it find fresh buying orders, we could see it breaking the 109.20 resistance line and aim for the 111.05 resistance zone. As for today's other economic highlights, during the European morning we get Germany's industrial orders for December, and later on New Zealand's milk auction data, US and Canada's trade balance for December, as well as Canada's IV PMI for January. Last but not least, we get New Zealand's unemployment rate which could move the New Zealand dollar, as the release is one day ahead of RBA and Z's interest rate decision. As for speakers, German Bundesbank President Weidmann and FOMC member Bullard speak. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Iosif, analyst at IronFX, wishing you solid trading.